we're heading more into the broader institutional discussion. So rejoining me on stage is our wonderful moderator for the morning sessions, Isabell Moessler, founder and CEO of IMC Consult. She is joined by her panel, Fernando Vázquez, president of Chainlink Labs and board member at Signum, as well as Dr. Nagendra Bharatula, founder and CEO of the G20 Group, and Pierre, Samaties, chief business officer at the DFINITY Foundation. Let's give them a warm welcome as they take the stage.
Thank you. Back again with a different angle. Thank you guys for joining me on this panel on tech ventures, digital assets and capital markets. And the esteemed panel have tons of experience in each of those areas. So we're going to tap into some of your input there. But first step, please, may I ask you to introduce yourself?
Yeah, first of all, thank you for having me. I'm Fernando, president at Chainlink. We at Chainlink are pretty well known for our data oracles that connect the on-chain world with the off-chain world. Actually, we invented distributed oracle networks, which are the main driving force behind DeFi. As of today, we secure around 70% of all the TVL on-chain, and our total value enabled is around $16 trillion. These days, our focus is in the convergence between decentralized finance and traditional finance. And as part of that, we're building the primitives that you need to securely transact on-chain. We're talking about data standards, privacy standards, interoperability standards, and also privacy. It's a pleasure to be part of this panel. Thank you.
Thank you so much.
Thank you for having me here. My name is Nag. So I'm founder of G20, which is a currency, commodities, and cryptocurrencies trading firm based in Zurich, London, New York, and Hong Kong. We operate at the intersection of capital markets and cryptocurrencies. One of the largest market makers. Also, we have an investment arm where we invested over 60 projects in tech and cryptocurrency space. Thank you for having me here.
Thank you so much, Pierre.
Yeah, thank you so much. Pierre Samaties, Chief Business Officer at DFINITY. DFINITY, as most of you know, is the main contributor to the intercomputer, which is a sovereign cloud infrastructure where AI is building the web through very safe deployment. And obviously, we're also multi-chain, and hence, like, the idea of tech venture and capital market intersection is pretty interesting for us.
Definitely. So before we look at each of those areas, let's do a quick review of last year. You know, a lot happened in 2025. We had new highs, we had quite some lows, and all of that while the equity markets just kept plowing on. And sometimes, and I'm sure you had the same reaction, where the geopolitical events and the performance of the traditional stock market were just nowhere linked. How would you explain that disconnect now, more between the crypto world and traditional assets? Any insights there? And Nak, can I ask you to share your views? I know you feel passionate about that.
So I think if you really take 2025 is the first year where, despite stock markets really rallying to a record, crypto really didn't perform. So also dollar has completely collapsed against various currencies. So if you really look at what happened to the dollar, this explains the entire policy mistakes or the way a particular problem of trade deficit addressed by United States White House. So dollar lost 13% against Swiss franc, 11% against euro. Gold and silver rallied 60%, 150% in silver. Whereas cryptocurrencies also lost between 50 to 90%, Bitcoin, less than 10%, and Ethereum, Solana, 10 and 30%. Now, why did this happen? People have really lost confidence of expectancy of a proper policy. You just don't know what every morning is a new headline. So that is really not good for any institutional investors. But also when you have dollar actually deteriorating, people talk a lot about stable coins, right? Tether, Circle, anything. These are not really stable. You have lost actually at 13% by holding USDT or USDC. But if you also add inflation of 3% on top of it, you lost 15 to 16%. S&P went up by 18%, NASDAQ 21%. But if you measure in terms of the gold, you actually lost the money. Why this is happening? The central banks have actually diversifying away from the US government bonds, started buying gold and silver. And also people, high net worth investors, because there is no real clear policy understanding by anybody. And also, as we saw, renewed attacks on Fed independence, Greenland takeover, etc. So what happens when you have these kind of geopolitical incidents, the central banks ask for more interest rate return in the long end of the curve, which means your 30-year government bonds in yen, US dollar, you need to pay more, which is not very good for the housing market, because housing market in US is priced out of your 30-year yield, which is 6%. So in Switzerland, just to give you a comparison, interest rates are 0. You can borrow to buy a house 1.4% for 10 years. In US, it's 6%. So the affordability has really gone down because you actually stocks going up. And other problem crypto faced was a lot of money went into AI infrastructure foundation level. So NVIDIA, AMD, all the stocks where actually provide semiconductor chips, that's where money went in. And who are the clients of them? All the big Mag 7, like, Alphabet, etc. So investors did rewarded cash flow companies like Alphabet and Apple, which are not leveraged growth, but they punished Oracle and also Meta, which is over leveraged spending on the hyperscalers, which is you spend a lot of money in AI for growth, you get punished because AI still is at a very early stage. So you need to spend a lot of the money on compute, but if you don't make cash, you're punished. And that's why, and crypto mostly is more on the narrative plus less on the revenue generating side. Last but not the least, total US current account deficit shrunk from 1.83 trillion to 1.78, which means we have less liquidity available. Of course, that's what happened in 2025. So overall market shrunk and investors moved away from these assets into, preservation of the capital and everything. And that's where we are in now. We'll talk about 26 in a moment later.
Yeah,
that's what happened. Yeah,
it's true. So many different drivers and really different perspectives. But the key themes, I think you could also see on a global basis and in many different economies who are facing the same. Pierre, your take on the last year?
Well, I think it was a very interesting year in the sense that, despite what Nag just mentioned for the general markets, and I think there is an increased awareness of investors on what actually is real in digital assets and what is narrative. And narratives are collapsing faster than you can actually count, which I think is a healthy correction that we're seeing in the market being more mature and really, as Nag also said, more focusing on revenue generation, really focusing on real tech that is building. So obviously for us, just from the perspective of DFINITY, we've built a lot of great things in 2025. Caffeine AI is one of the things that we worked on so far. Clearly the strategy was just build the great tech, follow the long-term vision, because we know there will be a time when the market is going to shift from narrative to fundamentals. I think it would be wishful thinking to say we are already there with the market being just focusing on fundamentals, but I think we're getting there, and I think 2025 was a clear pathway.
Actually, I think what Nag described refers mainly to native crypto assets. And again, I'm not positioned to add any meaningful insight on top of that, but I would like to distinguish between native crypto assets and tokenized assets, right? Security tokens, you name it. What I've seen last year is that finally big banks, global asset managers, prime brokers, you name it, moved the crypto initiatives or digitalized initiatives from cost centers like centers of excellence, R&D, innovation, to profit centers. I think, Pierre, you were trying to refer to that, right?
Yeah.
Let's try and build meaningful apps or DeFi services on these new blockchain-based rails. This didn't happen until last year. And that what makes me super bullish, that you will see more tokenization on chain And that's going to, in turn, drive the value of some of these native tokens that are necessary to guarantee the security of the chains themselves, right? So people must think, oh, last year was a really bad year. I would argue that is not the case. I think we do the first meaningful step towards the mainstreaming of blockchain international finance.
I agree. And that shift in sort of mindset as well, as you say, from the cost center to like, no, this is actually future-proofing our business, our interactions and everything. Fernando, I'd like to stick with you because you have extensive experience given your previous role and so in the Asia region. What have you seen there that worked and that really strengthened that case? Any learnings we can look at more in the Western market?
Yeah, absolutely. In my previous role, I was the CEO of SPI, Indeed Asset Holdings, part of the SPI Group, one of the most sophisticated players in the crypto space, especially in APAC. And many of you might know that Japan and Singapore were kind of the go-to jurisdictions when, the ACC in the US wouldn't allow anyone to do much, right, in the US. So I would argue that many of the risk frameworks, governance frameworks that are needed for big institutional players to be proactive in this space have already been built in Japan, Singapore, and Hong Kong. I think some of us kind of helped build up that blueprint. That said, in Japan and Singapore and most of these regions in APAC that have been pioneers, what we saw is that it was most of the demand came from retail investors who are willing to take on significant amount of risk. But when it comes to the big banks, big asset managers in Japan, ASEAN, you name it, they were not quite ready to take the leap of faith and invest meaningfully in this new asset class at a scale. Why is that? Because in many cases, when it comes to finance, the US sets the agenda. Mm. So again, I myself, I was a co-founder of the Project Guardian that was again driven by the MAS, so JP Morgan, DBS, then and the SBI team. We did a number of groundbreaking pilots, but they were pilots. For all things to actually take off, I think we needed the US to change their approach to digital and crypto, and that is happening now. And I think there are some of these learnings that some of us obtained. We're gonna do the so-called blockchain winter, I call it. They will apply now, and so we are bringing that to the US because some of us have done it already. But again, in terms of getting actually institutional adoption, we were waiting for the US to be ready, and now they're ready.
Yeah, we have finally made that big leap, and the Project Guardian you mentioned was also watched with interest in the UK. I'm based in London, so yeah, that was really a topic many people were paying a lot of attention to. Pierre, on your view on capital markets, on opportunities, what do you have for us?
Yeah, obviously also 2025 was a very exciting year in the sense that we saw the re-emergence or mainstream emergence of the DATs, right? Digital asset treasury companies. There was obviously a massive inflow on DATs, and we've seen a lot of these companies raising a lot of money initially. And we were obviously also observing that market and thinking about the fact that it would make sense to have an internet computer DAT at one point in time. I think in hindsight, we're happy that we didn't follow that path in 2025, because if you look at all the DATs, they're trading below the MNAV right now. So from an investor point of view, status quo, they're not a great investment. But where we think the journey is going to go is move away from pure DATs, digital asset treasury companies, to operating companies that hold digital assets in their treasury. So more meaningful, having, for instance, something like Kefin AI that could at one point in time be listed on NASDAQ as an operating company, but then hold ICP and other assets as a treasury. And we're seeing this more and more also with like projects from our ecosystem that are building on the internet computer, that want to do a reverse merger with some companies, and then have a treasury in ICP. So I'm still very optimistic about the idea of connecting capital markets to the technology and making this technology really more widely available to investors. Because let's face it, Nasdaq is countless times bigger than the current crypto investor environment. And I think it's a great thing, and I'm pretty sure that projects that will have something meaningful to offer from an operating company point of view, that really have a use case that can make money, will create DATs and will get Nasdaq listings this year.
So really moving away from what we've seen as stats in the last year, and having a different mission. And like, I have to come to you with that. Your extensive experience. What can you share?
So I think the last year we've seen the IPOs in the crypto space, Circle, and several other names. And 26, you will see Crack and BitGo, a couple of other names going for IPO. So that's the maturation of the crypto industry. So we have ICP, DFINITY, Chainlink, which didn't do that last year. We had extensive conversation, and I think it was the right thing to do. So we, as G20, invested in many DATs. We managed some of the DATs, treasuries, etc. So there was a mad rush after. So that is basically a disk asset treasury, but you have a stock market stock that basically issues more stock, sells it, and then buys the underlying token. This is pioneered by Michael Saylor of MicroStrategy, and the stock outperformed Bitcoin. So because in many countries, you don't have access to crypto, or crypto is taxed more than stocks. For example, India. For example, many countries don't really like crypto. So there, people buy a stock as a proxy for Bitcoin. And then the Shoplink Gaming, which is led by Joseph Lubin and Shalom, they went live in the beginning of the year, which was a big success. It went almost $6.1 was the pipe price, and then went to 36. And then there was a mad rush with Tom Lee, which is BMNR, was very successful. They did at 4, it almost went to 100. And of course, now everybody started issuing DATs. You have every token that is really there out trying to, and then Cantor Fitzgerald, some of the investment banks, they led the rounds. And it was, at one point, it was a mad rush. Every week there was 10 DATs going live. So what happened is that the appetite for investors went down, because you needed to maintain the multiplier to the net asset value, which is the token value multiplied by the number of tokens, should be trading at a premium to the total value. It didn't happen because you have to issue a stock, sell the stock, have the cash, buy the token. That flywheel collapsed when it started trading at a discount. And none of them, they have any operating business. So they were acquiring shells of a vapor company or a failed biotech company, etc. So the banks, what we advise the people that work with us are like, you really need a proper operating business that should make sense for the underlying chain. Otherwise, it just doesn't make sense. Also, they didn't have proper thought process of having a proper governance, proper board. People were all over the place. I think what we are seeing, we just did a workshop at CFC St. Mary's on how to build the next Berkshire Hathaway of that. And we wrote a 50-page research report, which was well received. So Berkshire, as an example, if you invested in Berkshire $1 in 1965, $1, the value of that in 2024 is $60,000. So, and it did 19.7% compounded rate for 60 years, which is an unbeatable record. So S&P is 10.5% in the same period. So if you actually can grow 20% per annum forever, you can beat Berkshire. So that's very hard. So as DFINITY, which has a very good potential and they have really good tech, also what happened is because of the rise of the AI, the coding has become a lot easier. So the code need to be discounting what is the value of the product that you are actually coding, which is crypto, where they say code is the law, but the law can get really cheap if you have AI doing the coding. So all the companies that were built in the past, you could really develop really easy by copying the code. So you have a different pricing of a team that spends 20 million. Today you can do it for 2 million. So it's not the same valuation. So that's where the valuations in crypto in the start seed level also collapsed. So altogether you have a token, but you also have very strong operating business that generate cash flows. That's a secret to win going forward. So I think, Chainlink, both of them have actually, they have real tech. Chainlink already is a leader in Oracle space that actually makes money. So I don't see the reason why they could be pretty successful if they could execute it in the future. So you have that's really simple.
So really, those lessons learned, and Pierre, what you is sort of on your roadmap, and sticking with the investment landscape. And Pierre, you came to this world from Roland Berger and set up their digital asset practice. If we look at, and I don't really like the expression smart money, but so be it. Let's stick with the smart money. Where do you see that going? And I would like to pose the question to all of you guys. So really, where's the money going? And also, what is driving the valuations? What are some of the implications? But Pierre, if I may start.
You mean in general across industries for smart money?
For smart, you can give us the broad view. Yeah, of course.
Okay. Well, I think then maybe just really from my perspective and from the work I've done in Roland Berger back then, it was mainly with sovereign funds, right? Which sovereign funds are usually not the first to invest in something, but they're very systematic in their approach, right? And I think you can see a clear trend that sovereign funds, in particular Middle East money right now, goes into obviously AI, like it's everything, right? Energy, in particular nuclear, right? And digital asset infrastructure that is kind of chain agnostic to a certain extent, right? Either chain agnostic or it is funding their own layer one chains. Because by the way, I think this is another trend we might see in 2026, because we already had some hints in 2025, is that the future of finance, so to say, which was like the one of the main use cases for blockchain, might rather be dominated by fintech chains rather than public L1s, right? I think the other fourth pillar I'm seeing where we see continuous increased interest and investment flowing is the entire idea of sovereign cloud, because now, since we have all the new headlines every day from the various parts of the world, people figure out that, hey, maybe it's a good idea to just secure my IT infrastructure and ensure that I really understand who has the keys to my IT infrastructure. As most of you know, the famous example of the US Cloud Act, that even if I have my servers from an American cloud provider in Europe, they need to comply to the US Cloud Act, which means they need to hand over the data, right? So we see a lot of investments, in particular in developing countries and countries outside of the US, to be fair, going into sovereign digital infrastructure.
Okay. Interesting, Fernando.
I like the fact, actually, I like the term smart money. I'd like to discuss why smart money in those servicing smart money didn't care about tokenization that much. At the end of the day, you care about the returns. A token is just a form factor. Why would you go through all the pain of finding a global custodian that knows how to offer custody for the token if the only thing you can get out of it is operational efficiencies, allegedly? There has to be something else. We actually call that utility. They say you hold, a tokenized mutual fund, and all of a sudden you can post that as collateral to borrow stable coins against it. Many DeFi pools allow you to do that. What if we had a prime broker that would allow you to post your tokenized asset, whatever that is, so then you can go into trading as CME. Now you can do something with this asset beyond selling it and holding it. You can borrow against it. You can use it as a variable margining. I think that's going to be the big unlock. Otherwise, there's no incentive for the smart money to hold this asset in this, scary looking form factor. I think we missed that for way too long. What I expect to happen in 2026 is the smart money will get even more sophisticated and will ask the issuers of that asset, let's say a fund, to structure that financial product in such a way that the legal framework behind it will allow them to have access to utility. All these networks that some of us, like Chainlink, DFINITY, and others, are building.
And I like that. And exactly in that terms, it's really a case of, again, not doing this as you described for the sake of, oh, we need to be active in this space, but to really, this is part of our business as usual. This is the steps we're taking in that area. I would like to, in the last few minutes, just really zoom out. We can't ignore the geopolitics. We really have to, because it does dictated to a certain degree the frameworks we're operating in. And really, so given the heightened volatility on the geopolitical front and, the rhetoric and everything, and we'll all be watching what's coming out of some discussions tomorrow. But how do these macro and also the political dynamics shape the broader market and the environment, particularly we are active in? Like, can I...
Sure.
pass it to you?
I think if you see the year, it started with U.S. administration arresting Maduro on drug trafficking charges. Now, what does it really, why did they do it? If you actually look at their side of the story, is that there is something called Monroe Doctrine, which is no European superpowers can operate in the Western Hemisphere in the 18. If they have a colony, they can't expand, and they can operate, but they cannot do any business that will affect the U.S. interest. So, and they say that the U.S. administration, that Venezuela is actually being operated by Iran, which is the evil empire according to the current U.S. administration, the regime. And you have China, and also you have Russia operating at the same time. The drone manufacturing is done, and they're sending drugs, etc. Now, the other big story is actually Venezuela has more oil reserves than Saudi Arabia. Now, of course, it's a very hard oil, so you need, they have a lot of sulfur, so it's not easy to extract. It takes a lot of time. However, if you control the oil in Venezuela, you actually can bring down the overall oil price below $50. At below $50, it's actually quite painful for Russia to fund the war. And also, it will hurt also the Middle East and everybody. So if they can control the oil reserves in Iran and also in Venezuela, it lowers the inflation. You have energy security in the Western Hemisphere. And also, this is a positive thing for AI future energy demand, because the Trump administration doesn't believe in ESG. They think that oil and fossil fuels are the key. So that's what happened there. So in the short term, it's bearish. It's not great for oil price can go up because it affects the one. And on the market side, if you see, there is a relentless bid. Even today, gold is up 3%, silver is up 7%. So investors don't like a US administration attacking a NATO member that we want to take away the land, because that's the end of the NATO. So we think that there's a word called TACO, which is Trump always chickens out. So he puts in a position where it's something just odd sounds and then walks back, because they want European countries to spend defense spending to 5% of the GDP. So very positive on the European defense. If you see any defense stock, it will just go through the roof in Europe. So everybody will invest. Memory is also in very big high demand. So Micron, Seagate, Western Digital of that. Also, last but not the least, the BBA Act, which is coined by Trump, which is one big beautiful bill act, which gives families $2,000, earning $75,000 below income, a lot of like incentives if you invest in AI. This is going to give $140 billion in total spending. And then also they're going to blow up this whole deficit even higher with whatever they're doing. So we'll cross 2 trillion this year. It's going to completely the other way. So whatever they're trying to say to cut the deficit, we think it's going to go away. No, not at all. They will spend more money because he's asking for trillions of dollars in defense spending, right? To whatever the reason. So very bullish on the European defense stocks, bullish also on the AI sector, but selectively. You have to be very careful. So Alphabet was the winner of last year because they don't leverage for the AI growth. Then M2 money supply, if we look at Bitcoin, value, which is around, let's say, 2 trillion approximately, a little bit less than that now, 92,000. So M2 money supply of US, EU, Japan, and China is reaching around 100 trillion in the next 1 year. So we are what, 2% of the market cap of Bitcoin is 2% of the M2 money supply. So if it goes to 3%, it should trade around 160,000. Eventually, the real value, if this continues. which means Ethereum should trade 5,600 to 6,000. So from that, you can discount, where could be Chainlink, where could be ICP. So because there's no simple way to, of course, it has its own value of the tech stack, revenues, its own value, but I'm just making it a simplified. So you should be looking.
That's why I would like to bring you in, Fernando, just in terms of also how will all of this affect your business?
Yeah, actually, as a plumber, I'd like to look at things from a different angle. When you say geopolitics, most people think about politicians, right? The crazy things that they say, threats, you name it. But politicians have a time horizon. The bureaucracy has a completely different time horizon. Yeah. If people don't realize that despite all this noise, central banks are speaking with each other. Regulators in Switzerland, EU, UK, US, Japan, Singapore, Hong Kong, they're talking to each other. And we know that for a fact, but they're engaging with us. So again, these guys, the central bankers, they don't care about the midterms. They might care now with this is unnamed central banker was threatened. But I think it's safe to assume that central banks don't care about the next midterms or the next presidential election.
The time horizon is...
And those who have, time horizon that is measured in decades are doing the right thing. They are engaged with all of us in this panel, and many of you also, here in Davos, or those of you watching this, on YouTube. So I'm pretty bullish despite the noise. Because again, the guys who have the right mindset, the time horizon, who are going to be building the actual financial infrastructure of the future, are already speaking with each other.
Mm. And for Trump, hopefully he does a tackle on the Greenland issue, but just personal opinions. Yeah, may I ask you just to give us some final thoughts?
Yeah, I think for us, it's really like, as the saying goes, never expect a clear view for a near view. I think we are just continuing to focus on the long-term idea of the internet computer. And I actually think the current turmoil in the political landscape, which probably is going to go on for 2 to 3 years, is actually a headwind to the product that we're building, which is a sovereign infrastructure. Because no matter if this hectic goes away, people will now finally wake up and rather be safe than sorry at the end of the day and rethink their idea of their infrastructure that they're building on, because ultimately compute is the lifeline of our entire economies, right? So the final sentence, despite all the turmoil, I'm actually quite happy on the positive side of things that this is waking people up and moving them towards sovereign infrastructure.
Wonderful. What a perfect final word. So thank you so much to my panel. Thanks for your insights.